Ciao tutti, buongiorno. I gave you two long setups. One was the not so preferred long from the point of control in the middle of the range, and one was from this daily low and daily level here at 60,320 to 60,200. And the not so preferred trade played out. So congratulations if you took this trade. It was from the point of control. If you were fast, you were able to squeeze out approximately 1% before we were returning again. So that was nice. I did not take the trade because once we reached that point of control, I didn't see anything to me that was appealing or was really standing out saying, hey, we're going higher, take the long trade. But if you did, then you were probably able to get at least a scalp. That second long trade that we have here from the daily low and the daily level so far did not get hit yet, so that trade is for me still open. However, when we reached the important support and resistance level at 60,644, we did so with bullish divergence, so you were able to get into the trade, at least it was valid, and then to play to the upside. You can see here very clearly momentum waves going higher, price going lower, but yeah, it was not a trading setup for me because I want to see lower, and therefore I also didn't take this trade. Other than that, we're actually just going a little bit sideways. Let me quickly extend the volume profile because I bet you that the point of control very low and high are shifting, and yes they do. This trade we can take out. That short trade that we had is still in play. I said it's getting weaker, I'm not really liking it. Now I'm starting to like it more. The reason why I liked it when we were trading here is because we had reasons to go higher, to backtest it, and then to go lower, but because it didn't hit very clearly that value area low at the time, at least on my Bybit chart, I did not take the trade, and instead we also already took all the liquidity, so it's getting a little bit of a weaker trade. However, now we are creating lower highs constantly, and so there is a reason to go up again to take the liquidity. So this trade now is getting better, and I will definitely be looking to take that. And then of course the idea is that we're backtesting that very much macro value area low that we have been creating in this very big range up to 3 months. I will extend it just to be sure, and that is a very clear backtest. What you then want to see is that we may be closing a few candles above, 5 minute, 15 minute, and then eventually losing it again. Then you're entering here in your stop loss above the high. Really, you can then target all the way the lows or even further. So I will definitely be on the lookout. If we're just smashing through, then I'll just do the reverse. I will be looking for a long because that is most likely then a reclaim of the level, but I want to see an hourly, actually preferably a 4-hour close above that macro value area low. That for me would be a pretty good confirmation that we reclaim that very strong resistance. Now, one thing that has been brought to my attention is that someone said to me, are you not afraid for that very macro M pattern that we are creating right now, and that we would break to the downside, because that is actually the textbook play of this pattern. You're creating this big M pattern, then you are measuring the move. I always like to be a little bit conservative, so I'm not taking the absolute high and the absolute low, but let's take the one with most of the touch points. So this is a pretty good level. You copy paste that under then let's say the breakout, and you would then have a target of approximately 47,700. And that's of course also the reason of the title of the video, is that a lot of people are looking at this breakout. Two things. A, I am not trading this pattern. For me, this time frame is way too big. Like I said, it almost took us, I think, 3 months now to create this. Well, almost we are at 3 months, 121 days where we are right now. In my book, that's 3 months. My experience is the bigger the pattern on a bigger time frame, more likely than not, or at least higher chances that it's not playing out, and that you maybe see a little bit of a drop and eventually we're going higher. So you're then trapping everyone who says, oh, we are breaking down and now we're going lower, but eventually then you're just reversing the move. The same kind of thing, and I'm going to take this out real quick, we actually also saw here, I also saw this a lot on social media, is that people said we are creating this very big falling wedge that usually, or at least the theory says, we should break it to the upside, and then the target should be the high. So here is your break, and then you just target these highs right here. Makes a lot of sense, but also here the time frame that we are creating this pattern all the way to the breakout is 19 to almost 20 days. For me, that is way too big. And also here you can see that we did not have a breakout to the upside, but a breakdown. So this also wrecked a lot of people who were maybe already longing in this, who were maybe already longing in this pattern to the upside, and then they most likely got stopped out here if they didn't use a stop loss. Back to that M pattern. Some people said, well, Ray, we had actually a very big M pattern which marked the top of the previous bull market. Yes, I understand that, and okay, there's no denying that this is an M pattern. It is not that pretty, because actually you want to have the right shoulder to be slightly lower than the previous one, already sign as a signal of weakness. But there was so much more data. You can also see that these highs are very close to each other, complete different sentiment, complete different stage of the bull market. So I'm sorry, but you cannot compare the current M pattern that we're making with the M pattern top that we had during the bull market. It's just a complete different environment. And linking one to the other, and therefore saying we need to break down and we need to reach that target, I think is very, very dangerous, especially on such a time frame, because you might short right now thinking that we are going lower because, hey, this needs to break down. Then eventually you will hold on to your trade maybe for many days or many weeks, because, hey, it took such a long time to create, so it may also take weeks before we're going down, and eventually you will see your money being stocked up here for maybe another week or 2 weeks if we're just going sideways. So I find it very dangerous to trade something like that. So again, not for me a pattern or a trade that I will take on such a big time frame. Therefore, I am looking much more at the trades that I'm giving you on a daily basis. I'm trading what is ahead of me, and if I see reasons to short, I will short. If I see reasons to hold that trade open for maybe half or 25%, nice. If we then eventually reach that target, that's cool, but that's never the station where I'm leaving them saying I need to reach that level because of the big M pattern. Absolutely not. Okay, last thing I want to say before we're leaving. I said a couple of videos ago that I will keep an eye on the in and outflow on the Bitcoin ETF. And I'm not really worried if we have a little bit of outflow, but what I don't like is if we have a day after day after day that is red, and we are having that right now. Now I'm going to give it one pass in the sense that I want to see the inflow picking up again in the beginning of July. These are very big parties that issue the ETF and are holding that for their customers. But they also have monthly and quarterly reports. Well, right now it's the end of June and also the end of the quarter. So it could be that a lot of these parties need to sell off to clear the books, to clear the balance sheets, and to make sure that they start off with a clean sheet on the beginning of the new month and the new quarter. And therefore they might be selling off in the last 2 weeks of July. So if that is the case, I am giving it a pass, but I really want to see a steady inflow again on the first week of July. That for me is very important. We're kind of seeing a very little inflow right now, but I want to see a more stronger inflow on the first week of July. If this keeps going on, also in the first week or 2 weeks of July, the selling continues, then I'm getting worried, because that might cause more sell pressure on Bitcoin, and then we can expect much lower levels. For now, again, you know me, I'm trading it level by level, trade by trade. I'm still looking out for that long here from the daily and the daily low, and my first short will be here from these highs, which also then coincides with the macro value area low. That's it. Okay guys, be careful, enjoy your weekend, take some time off from the charts and come back fresh on Monday. And since I have you now here anyways, please do me a favor, like, subscribe, click the bell, click on all so that you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also feel free to follow me on Twitter and Instagram, both of those links you'll find in the description. See you guys very, very soon again in the next one. Bye bye.